Okay, good morning, everybody. Trust your evening went well. Supposed to be brisk today, not getting over 50, with perhaps our first killing frost tonight. So we'll see if that actually happens. We've been riding warmer than normal due to La Nina, and that tends to make temperatures on the southern plains warmer than normal and precipitation less. And the drought in Kansas, Oklahoma, and Texas does impact grain prices and meat prices, and that's not going to go away until the drought is broken. The hard red winter wheat crop from Texas through Kansas is once again suspect because they had to do what is called dusting it in. They put it in under dry conditions and pray for rain. Now, hard red winter wheat, hard red winter wheat is a very, very important contract and commodity worldwide, especially in the Middle East. People, if you feed them quite willing, will allow oppressive governments to prevail and stay in place, but if they're being beaten up and have all their freedoms taken away from them and they don't get any food either, then, I mean, what's so bad about a bullet? That's when they revolt. So dictatorships can fail. Price of bread goes too high. And one of the areas that has concentrated dictatorships, authoritarian rule, is the Middle East. And Egypt would be the prime example of that. Supposedly Egypt, because of this changing government, the loss of the tourist industry is down to less than 2 months worth of cash. So got to keep your eyes on the price of wheat too. Okay, Glenn this morning pointed out that we've got a huge triangle forming, and there's a theory in the market profile that the longer you spend in development, the bigger the magnitude of the move. Now, it's really, really difficult to see this market trading a hell of a lot higher because the 10%, the 10-year notes yield is less than 10% right now. But for us as traders, we're looking for a mom or a new move out of this 130.04, 130.08 area on this scaling. And we'll want to join that move. And the old theory used to be that if you have X amount of days in development, then you'll have X days in movement. I don't, there's a lot of different theories, and people try to quantify everything you see in the profile to get it to 2 lines crossing or some sort of mathematical reduction to math. But it's really hard to do. I mean, markets change, people change. There's a lot of stuff that impacts on the markets. But having said that, if we do get a move out of this 130.08, 130.04 area, we want to join it. We don't want to fade it. So here we sit. The direction of the ES probably, after this morning's news, probably sets the direction for this one. But I basically see, support 130 and resistance at 131. And we've had a hard time holding 130.24 and higher. So what type of news does it take? Need some help from the EU or some pretty heavy selling in the E-mini, I think, to break us out and hold us above 131. Okay, Spain's Barossa came out overnight and said the problems are systemic in Europe, and it's going to take massive aid to overcome their current problems. Last week, the markets were euphoric about the change in the Italian government and the ECB's intervention in combination with the change of the Italian government took the yield on the Italian bonds less than 7%. I think it got down to 6.4 as people covered their shorts. Their 10-year paper is back at, I think it's 7.15 this morning. Every spread in the EU between German bonds, German paper, and everybody else's, including France. France has widened last night. So unless somebody's willing to pony up another $3 trillion, the only choice left to the EU is to devalue the euro currency, which will make the northern members of the EU madder or as mad can be. So again, these problems are systemic, they're widespread. Some people estimate that our exposure to French, German, and EU paper could approach $1 trillion in the U.S. with our 5 large banks that are too big to fail. So once again, this uncertainty as to the resolution of European Union debt will keep a premium in our treasuries. Well, if that happens, Anthony, we might. The best I could see would be sideways for our equity markets and our treasuries. You would take the dollar's devaluation out of it, so the best you could see would be sideways. And you'd take the dollar's differential between the euro currency out of play. The dollar would strengthen, and that actually could help in our equity markets. I mean, if you think about just the world's reserve currency, I mean, it can't be the German mark. I mean, their economy is what, 3 trillion? Our economy is 15 trillion. So it can't be the Swiss franc. It sure can't be the Chinese or Russian ruble or the rest of it. So the premium will always stays in our market a little bit. I mean, 100 years from now, somebody's still going to have dollars in their mattresses. So it probably helps stabilize our markets. The other thing is that the economic news of late has been coming in stronger than forecast, and our economy has benefited our large multinationals from exports of computer high-tech equipment, high-tech machinery, etc. So if Europe devalues, we might lose a little bit of that market that we've had. The EU, when you put all the countries together, is our largest trading partner, followed by France and then China. So here we are sideways, and we've got really good support down in this 29-24 area. And we've got some support in this 4 to 8 area right here. So here's the controlling volume at 8. As long as we can stay above 8, we can trade higher. We've had a very difficult time holding 28. So 24 to 28 is pretty good resistance. And 4 to 8 is pretty good support. And my guess is that we're looking at a trading range today if this morning's news comes in as forecast. CPI is called unchanged. Core CPI at plus 1/10. Long-term net capital inflow, I didn't see an estimate this morning. Normally it's in the 45 to 50 billion area, but last month it came in at 57.9. If it comes in above 45 billion, the markets will like it. Both of them will. Industrial production at plus 0.4. Capacity utilization at 77.7. If those numbers come in forecast, good for the E-mini, not so good for the note and the bond. NAHB housing index, nobody will pay any attention to, and I believe the EIE crude inventories are out today too. Oh man, just think if you gave a mercantilist, ruthless, ruthlessly managed economy, their currency was the reserve. That would be catastrophic. The way our government is taking things right now, and the EU may soon join us. That might be what turns out. But I mean, China doesn't have to do anything. Do you think, with that amount of money out there that we've given to them, that Taiwan stands a chance? You know what's keeping Taiwan from being totally swallowed by China is the fact that most of the investment capital in Chinese factories started and came from Taiwan. And China will make a lot of bluster, but Taiwan's industrialist community is really tied to China, so they'll make a lot of noise. They'll do a lot of things. China will rattle their swords, but probably status quo. You think the United States is going to jump in the middle of that anymore? Probably not. Okay, 12 is near support, and we've got resistance at 18 to 20. Doubt if CPI has any impact on the markets one way or the other. It is basically called unchanged. Most economic forecasts, including the latest from the Bank of England, say inflation will disappear next year as the world's economies begin to contract. So 18 to 20 is our sell band. I have a sell out at 20 to 23. We'll see if we can get there. On the buy side, 9s to 13s is where the buy area is, the first one. And right now we're moving sideways, awaiting news. I mean, the real problem with China is that you really don't know if their economic numbers are for real or not. And that makes it very difficult to place money with them. Now, the old adage about Russia is never invest in Russia unless you're prepared to lose 100% of your investment still rings true. The Russian mafia, the Russian government, when they found oil and gas that was developed, needed the technology to develop it from Western companies, they expropriate them. They just take them. And you hope to get such a high return on your investment so fast before the Russians can really see how good it is that you won't have that kind of exposure. But it's when you deal with basically people that don't mind killing their own population, what do you think? How do you think they're going to treat your money? And that's why the dollar and having some money invested in U.S. markets will be with us for a very long time. We're more transparent. You can get your money when you want it. Okay, if you were to look at this particular scenario right now between 70 and say 20, yeah, that puts a new move somewhere out of this 38 to maybe as high as 50 area as we're coming to a balance. And like we've said all week, this 35 area is a pretty important number for the market. So again, EU's problems and the U.S. economy. And the numbers for the U.S. economy have come in more in line with the Fed's, let's say, slow growth, not recession. The EU is headed to a recession through higher taxes to Northern Europe and less spending for Southern Europe. And that recession, if they are our largest trading partner, if we don't get growth out of South America and Asia, will impact us too. Okay, the overnight session is a B, favoring the sell side. I'd like to get short to see if we can bust that 1230, 1235 area. And if we can't, we'll come back and play on a trading range scenario. But one of the night now, there will be congruency with the TPO players, which is most of the profile world, and the volume players. And if you look here, we're dealing with a B. If you look at the volume and this one, it's leaning B. And if you look at the volume on this one and the TPOs, it's leaning B. So everything is telling us to sell this 55 to 60 area to retest these lows right here. So we've got pretty good support at 32, so 1232 to 35 has been support. I'd like to get short to bust that level, see if we could take it out. We do have news this morning. The focus will be industrial production, called up 4/10, and capacity utilization at 77.7. If it comes in that high, we've probably got a pretty fair shot at reselling the 55 to 60 area. If it comes in less than that, we'll probably be lucky to get something off against 50. Got enough volume in this 48 to 50 area to get pulled up to it. We're at 45 right now. That won't take much. So selling against 1250, then against 1255 are the two trades that I see to see if we can bust 32 to 35. And if we can't take it out, we'll assume a trading range, and we'll probably be getting long at 40 or better and probably getting short above 50. Okay, looking at this market, we had a B in the overnight. We had selling, the news out of Europe. Asia's markets really sold heavily last night. Europe's markets did not sell that heavily, but all stock markets were selling. So from the profile and the rest of it, the direction was down. So how do you participate in this? For those in Europe and Asia, you had a chance to sell up here. It was a nice setback trade after Europe had been open. It came down. And then right here we get our M pattern. Fade the mean trade, and it's produced a winner. Not a big one, but a winner nonetheless. And when we get up above 1255, they tend to sell. When we start to sell, the market, I mean, this number tends to get smaller and go red. When we get down in the 1230, 1225 area, or as we sell, this number tends to be blue from the 50 lot player, as my guess is the Fed is buffering the selling in the market. So Got to take out 32 to 35 to stay short. I think it's easier for the exchange members to go get stops below the overnight sessions low than it is to get stops above the overnight sessions high. So that's the way I think it should be played. And basically getting short to see if we can bust 32 to 35. Any questions? Okay, inflation news has not been in play. When the Fed decides to start fighting inflation, and their models all say deflation, and they've said deflation from day one was the bigger problem, and especially with so much debt based on home values. So until the Fed starts fighting inflation, inflation just doesn't get much news. They say people out of work, excess manufacturing capacity will keep inflation in check, even though concrete, copper, all the rest of the raw commodities have really rallied. So here we find ourselves just kind of moving sideways and awaiting this morning's news. We have news on the half hour. Then we have news, I believe, at about 15 after the next hour. So we'll see what's happening. If there are no questions, I'll be quiet.